What if I told you that your money is quietly disappearing, even when the number in your bank account stays the same? You wake up, you go to work, you save, you budget. You think you're doing everything right, but behind the scenes, something invisible is happening, something that has destroyed empires, collapsed middle classes, and wiped out entire generations of wealth. It doesn't arrive with explosions, it doesn't make headlines at first, it doesn't look like a crisis, it looks like normal life. Prices rise slowly, your paycheck feels smaller. Rent becomes heavier, groceries cost more, and one day, you realize something terrifying. Your money doesn't buy what it used to. So what really happens? When money loses value, who causes it? Who benefits? And why does history keep repeating this same disaster again and again? Today, we were uncovering the hidden mechanics behind monetary collapse and why the next chapter may already be unfolding around you. But to understand where we're going, we must first go back to where money itself began. Most people believe money has value because it's money, but money has no real value on its own. You can't eat it, you can't drink it, you can't build shelter with it. Money only works because society agrees to believe in it. Thousands of years ago, humans traded real goods, grain, livestock, tools. This was slow and inefficient, so civilizations created something easier: money. Gold and silver became the first global currencies. Why? Because they were rare, durable, and difficult to fake. Money was tied to something real. For centuries, wealth meant holding physical assets, land, metals, resources. But everything changed when governments realized something powerful. They didn't need gold to create money anymore. They only needed control. The modern monetary system was born when nations abandoned hard money and moved to fiat currency. Fiat money is money backed by nothing except government authority and trust. No gold, no silver, no physical limit, just promises. At first, this system seemed brilliant. Governments could fund wars, build infrastructure, stimulate economies, and respond to crises instantly. But this new power came with a dangerous side effect. When you can create unlimited money, you eventually will. And that's when the slow destruction begins. Here's the simple truth most people never hear. Money loses value not because things get more expensive. Things get expensive because money loses value. When governments print more currency without increasing real production, the supply of money grows faster than goods and services. More money chasing the same amount of products equals higher prices. This process is called inflation. But inflation isn't just an economic statistic. It is a silent tax. A tax on savers. A tax on workers. A tax on the middle class. And it operates without permission. You don't vote for it. You don't sign up for it. You simply experience it. At first, money printing seems harmless. Small increases, temporary stimulus, emergency spending. But over time, governments become dependent on it. Why raise taxes when you can print? Why cut spending when you can borrow? Why face voters when you can inflate debt away? Central banks step in, interest rates drop, credit becomes cheap, people borrow more, asset prices rise, homes get expensive, stocks surge, wealth appears to grow. But this growth is artificial. It's not coming from productivity, it's coming from currency expansion. This is the illusion phase. Everything looks good until reality catches up. Here's what usually happens before money collapses. Governments accumulate massive debt. Central banks increase money supply rapidly. Wages lag behind inflation. Living costs rise faster than income. Savings lose purchasing power. Citizens feel poorer even while working harder. People start noticing, why does my salary feel smaller every year? Why can't I save anymore? Why does life feel more expensive? But instead of questioning the system, most blame themselves. They think they're failing. They're not. The currency is. Money only works because people trust it. The moment that trust cracks, everything accelerates. Once citizens realize their currency is losing value quickly, behavior changes instantly. They stop saving. They rush to spend. They hoard goods. They convert money into assets. This creates a feedback loop. More spending gives higher prices, gives more panic, gives faster inflation. This is how slow inflation becomes runaway inflation. And this is where history gives us chilling examples. In the early 1920s, Germany experienced one of the most extreme monetary collapses ever recorded. At first, inflation was manageable. Then it exploded. Workers were paid twice a day so they could spend money before prices changed. People used banknotes as wallpaper. Children built toys from stacks of cash. Money became cheaper. Then paper? But here's the scary part. It didn't start as chaos. It started exactly like modern economies: debt, money printing, political pressure, economic stimulus. The same pattern repeats again and again. Zimbabwe, Venezuela, Argentina, Turkey, Lebanon. Different countries, same script. When money loses value, governments don't collapse first. People do. Families cut food. Parents work multiple jobs. Savings evaporate. Retirements disappear. Dreams get postponed indefinitely. The middle class shrinks. Those with assets survive. Those with only wages fall behind. Wealth inequality explodes. And this is where the biggest lie exists. Inflation hurts everyone equally. It doesn't. Those closest to money creation, banks, institutions, corporations, benefit first. Everyone else pays later. Now here's the uncomfortable question. Are we seeing the same early signals today? Global debt at record levels, trillions printed in recent years, rising living costs worldwide, housing becoming unreachable, savings accounts losing real value, central banks trapped between inflation and recession. History doesn't repeat perfectly, but it rhymes, and the rhyme is getting louder. Money doesn't collapse suddenly. It decays slowly, then all at once. We saw how governments print, how inflation quietly steals purchasing power, and how entire societies walk toward monetary disaster without realizing it. Now the question becomes far more serious. What happens when the system finally breaks? What do governments do when money is already losing credibility? Who escapes the damage? And why do the same solutions keep failing every time? This is where the real story begins. When inflation gets out of hand, governments rarely admit the true cause. They don't say, "We created too much money." Instead, they look for someone to blame. Corporations, retailers, farmers, speculators, foreign countries. And then come the emergency measures: price controls, capital restrictions, currency limits, import bans, bank withdrawal caps. These policies are presented as protection, but historically, they almost always make things worse. Let's take price controls. On paper, it sounds logical. Freeze prices so people can afford essentials. But here's what actually happens. If businesses are forced to sell at a loss, they stop producing, shelves go empty, black markets appear, shortages explode. Now inflation transforms into scarcity. People can't find food, medicine, fuel, even when they technically have money. The currency may still exist, but the economy stops functioning. As trust collapses, people rush to protect whatever value they still have. They withdraw cash. They buy hard assets. They convert to foreign currencies. They move money overseas. Banks can't handle mass withdrawals, so governments step in again. Withdrawal limits, account freezes, currency conversion restrictions. This is when citizens realize something terrifying. Their money was never fully theirs. It was permission-based access, and permission can be revoked. Here's a harsh reality most people never hear. Monetary collapse doesn't destroy wealth. It transfers it. Those who hold cash and salaries lose purchasing power. Those who hold assets, land, property, commodities, businesses survive far better. Debt holders often benefit too. Why? Because inflation erodes the real value of debt. If you borrowed money and inflation skyrockets, you repay loans with cheaper currency. This is why governments often tolerate inflation. It silently reduces national debt burdens. But ordinary savers pay the price. Look across history and the pattern is disturbingly consistent. 1. Excess money creation. 2. Rising inflation. 3. Government intervention. 4. Market distortions. 5. Public panic. 6. Currency collapse. 7. New monetary system introduced. Germany replaced the mark. Zimbabwe introduced multiple new currencies. Venezuela removed zeros repeatedly. Argentina cycles through reforms again and again. The old money dies. A new system is born, and trust must be rebuilt from scratch. Now let's connect this to today. Modern economies are more connected than ever. Global supply chains, digital payments, centralized banking, instant capital flows. This creates speed, When things break, they break faster. Recent years have shown trillions created in stimulus, massive government deficits, central banks trapped between inflation and recession, rising housing costs worldwide, food and energy price shocks, growing public debt dependency. The scale is unprecedented. Never before has so much money been created so quickly across so many major economies at the same time. Which raises a dangerous question: what happens when trust cracks globally instead of locally? Many governments now promote digital currencies as the solution. Central bank digital currencies, CBDCs, they promise efficiency, security, and transparency. But they also introduce something new: programmable money. Money that can be restricted, tracked, limited, timed, approved or denied during monetary crises. This gives authorities extreme control over economic behavior. They can force spending, block withdrawals, restrict certain purchases, monitor transactions in real time. The currency becomes a policy tool, not just money. This represents the next evolution of monetary power. When money loses value, society itself changes. People stop planning long-term. Short-term survival becomes priority. Trust between citizens erodes. Crime often rises. Institutions lose credibility. When money becomes unreliable, cooperation breaks down. Why save? Why invest? Why trust contracts? This is how economic instability becomes social instability, and rebuilding takes years, sometimes decades. So who survives monetary collapse better than others? History shows several patterns. 1. Those with diversified assets. 2. Those with skills that generate income regardless of currency. 3. Those who understand inflation mechanics. 4. Those who adapt early. 5. Those who don't rely entirely on one system. It's not about being rich, it's about being prepared. Financial education becomes survival education. Let's bring everything together with 3 critical takeaways. Currency is a tool. Wealth is purchasing power. If your wealth exists only as cash, it is vulnerable. True wealth includes productive assets, skills, knowledge, ownership. Adaptability. Money is temporary. Value creation lasts longer. Inflation isn't random. It comes from deliberate monetary decisions. Understanding this changes everything. It explains why savings accounts feel useless, asset prices rise faster than wages, debt becomes normalized, living costs never go back down. Once you see inflation as policy, not mystery, you stop being surprised by the outcome. Every generation believes this time is different. Every generation is wrong. Technology changes. Politics change. Currencies change. Human behavior does not. Fear, greed, power, debt, control. The same cycle repeats, just with new tools. Here's the question I want you to think about. If money continues losing value, and governments keep printing, and debt keeps rising, what kind of system comes next? Will it be more free, or more controlled, more decentralized, or more centralized? Because monetary collapse doesn't just change economics, it reshapes society, and whether you thrive or struggle depends on whether you understand what's happening early enough. If this video helped you see money differently, don't let this knowledge stop here. Subscribe for more deep financial breakdowns. Like this video so more people wake up to what's happening. And comment below. Do you think money is already losing trust, or are we still in the early stage? Because the most dangerous time in any monetary system is when people believe nothing is wrong.